G'day legends and welcome back to another video. After the recent volatile events in the cryptocurrency market and coincidental top on the 6th of October exactly as the 4-year cycle was projecting, a lot of people are beginning to ask, are we entering another bear market? In today's video, we are going to be diving deep into that concept, giving you our bottom predictions. Not only the exact price we expect Bitcoin to bottom at, but the dates as well. These predictions are going to be made based on the 1064-day bar theory, the exact theory that gave us the 6th of October top. Alongside this, we'll also be discussing invalidations of those predictions. At what point do those predictions become redundant? We'll also be diving deep into the short term, discussing the continued bounce for Bitcoin and current retest of 115,000 as Bitcoin on the hourly chart is still struggling to show demand above this level, risking some negative momentum shifts and some short term pullbacks. We are diving deep into the short term for Bitcoin, discussing exactly what is happening, the key levels you should be paying attention to, and what to expect next for both the total cryptocurrency and altcoin market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you're interested in, you can also join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by checking out the pinned comment. All information is provided for you there. Let's go ahead, guys, and jump into it. So like we said in the intro, we're discussing the 4-year cycle, potential bottom targets, and dates you should be paying attention to, and this data is going to be extracted from and extrapolated forward from the 1064-day bar theory, a theory we did extensive analysis on. As you can see, all the mathematics we did here to come to our probabilities and dates we should be paying attention to. So we'll discuss that in today's video. We'll also, like we mentioned, discuss Bitcoin's price action in extensive detail. Are we going to see pullbacks here, which currently seems to be quite likely, or will Bitcoin absorb this selling and push into that next resistance at 118? We'll be answering all of that in the video. Let's start on the market data, 24-hour volume and 24-hour liquidations. Volume is down 5.15%, so very little change here, 378 billion for volume. Liquidations, very split down the middle, 393 million, 193 longs, 199 million shorts. This is showing us we are seeing a lot of indecision at this particular point in price. We are sitting at that daily 50 EMA, and we are sitting at this level of resistance at 115 on the daily chart. We can see already how that 50 EMA is acting as a temporary resistance. We can see on the hourly chart over here, we have got some bearish divergences developing. Again, the price pushing slightly higher, the RSI dropping, and we run the risk of a breakdown of this uptrend in the RSI, which would be a negative momentum shift, which will likely result in a correction all the way back down into 112,000. So the risk of pullbacks here is really starting to build as we are seeing this exhaustion develop up in this level. And of course, as we see this exhaustion develop and there's still a little bit of demand, we are seeing a little bit of absorption, but that absorption is resulting in large liquidations for both shorts and for longs, as the price action is more or less just chopping sideways. So quite an interesting period, quite a uncertain period in the short term, but we'll discuss that again in the video. So let's start by taking a look at the DXY now. The DXY, not too much change all in all for the DXY. It has been pushing very slightly upwards here on the weekly. If we jump over to the weekly chart really quickly, we can see it's pushing back up into that 100 region. Again, this 100 region is going to be acting as a temporary resistance. We did see the threats of more tariffs on China. This, of course, caused a lot of turbulence in the market. That was by no means justification for the massive liquidation we saw. I do believe that was collusion and manipulation, and often these random news events, particularly when they're not planned economic news events or planned releases, are just there to justify manipulation in the market. So I don't believe that was the cause of our mass liquidations, but it definitely has shaken up, I guess, the strength of the dollar and shaken up expectations moving forward, making the environment a little more volatile. Of course, when we see any sort of uncertainty, even though that uncertainty has been kind of taken a step back, he kind of backpedaled on those tariffs, we still do see the DXY push upwards now. And again, as the Federal Reserve is trying to balance dropping interest rates and boosting the job market by doing so while managing the rising inflation, we are moving towards a little bit uncertain period where the Federal Reserve is kind of playing it by ear. They want to drop those rates to boost the job market, but if they do it too much, the interest rate, the inflation rate will start to rise, and then they're going to have to pause rates or potentially rise rates again. So depending on how all that plays out is going to massively determine where the market goes, and this is why we're seeing the DXY push up very slightly, as there's a little bit more uncertainty as we move into these next decisions. Looking at the S&P 500, we saw a pretty bad drop here. You can see just the scale of this drop here on the hourly chart. If we move over to something like a weekly chart, you can see how on the weekly chart, the S&P 500 is very much still pushing upwards. We do have a red dot printing here on the market server B, suggesting some weakening positive momentum. That is perfectly normal to see after we have a significant pullback after what has been a large rally. Of course, this pullback has been able to defend this weekly uptrend. You can see this weekly uptrend is get rid of everything on the chart here, so you can see it a little bit more clearly. This diagonal uptrend level has been defended. Again, if we drop below this region, we'd be expecting extended corrections into these lows. At the moment, this is going to be an assumed local top, so this move is going to be the more likely move while we remain under 6,800. If we break through 6,800, we enter price discovery again, we will likely push into 7,000. Pay attention to that. That is it, guys. Let's jump into Bitcoin. Before we jump into Bitcoin, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll go to support me making this content on a daily basis, and you'll support yourself in your trading journey. Let's go ahead and play a quick ad, and we'll get right back into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get right back into it. Now, we talked a little bit about the 4-year cycle yesterday. I want to talk about the 4-year cycle again today, but I want to give you exact bottom predictions and dates. Now, these aren't my personal subjective opinions. These are basically going to be derived and extrapolated from the historical date range trends we have seen play out over the past 4 cycles, the 4-year cycle, and the key indicators we're watching on the macros, such as the Gaussian channel, for these macro bottom targets and date targets. Now, we'll also be talking about at what point would this prediction be invalidated? So it is not designed to be, a written in stone, this is 100% going to happen. But if we see the 4-year cycle play out perfectly, moving forward again like it has in the prior cycles, these are the expected bottom dates and bottom prices we would see Bitcoin reach. So let's first and foremost talk about the 1064-day bar theory and how it's used to project tops and bottoms of Bitcoin. Very simply, if we look at the 1064-day bar theory, it has shown us that from the 2011 to 13, 15 to 18, 18 to 21, and 22 to 25 tops, we saw 1064 days on average. This is going to be our mean number, our median number, 1064 days. Some cycles had slightly more, some cycles had slightly less, but the median number is 1064 days. This, of course, has a standard deviation range of around 5.86 days. That is one standard deviation, and we can extend that to 2 standard deviations if we want to give us an expected maximal top or minimum top date we could expect for Bitcoin while still maintaining the 4-year cycle 1064-day bar theory. To put it very simply, after going through all of the mathematics, using daily and weekly lows to measure the 1064-day bar theory, the most important thing we need to understand is this pattern that has been playing out will break if we see a new top developed for Bitcoin after the 29th of October, okay? So we could still push up into new all-time highs again, and that would validate the 1064-day bar theory, slightly extending the next potential bottom date. But if we see a top occur after the 29th of October, it is very likely we have at least broken the 1064-day bar theory and or the 4-year cycle / reforging the length of these macro cycles. Something to pay attention to. Again, as always, cycle theory and cycles are deterministic approaches to trading. They are not designed to be used for actionable decision making. They are simply for confluence and for key level and key date identifications. We should not be trading based on cycle theory. It is speculative at most. So let's just apply the 1064-day bar theory to this chart. As we can see, we had around 1064 days from bottom to top, 1064 days bottom to top, 1064 days bottom to assumed top, which was the top recently on the 6th of October. If we take a look at the prior bear markets, these lasted for around 12 bars each. So if we went from 12 bars from the 1064-day theory top at, of course, the 6th of October 2025, that would bring us to a date, which is around about the 5th of October 2026. So the bottom date for Bitcoin, assuming the 1064-day bar theory continues, would be the 5th of October 2026. As for a bottom price for Bitcoin, we could do measured moves, we could do ratio analysis. The problem with both of those is that as the market cap begins to increase, the percentage drawdowns from tops to bottoms also decrease exponentially. So what we saw was 86% drawdowns in the first cycle, we saw 84% in the third, we saw 76% in the last. We will likely see a drawdown much smaller than 76% from the tops to bottoms. So we're not going to be using that because we do not know the intervals of which that is going to decrease, because it's clearly not a linear decrease, it is an exponential decrease, and the ratios are not clearly in any sort of definitive pattern going from 86 to 84 to 76. Therefore, what we're going to be looking at is we're going to be looking at key horizontal levels, and we're going to be looking at indicators such as the Gaussian channel, which is comprised of high time frame moving averages, to determine where the price has reached a equilibrium or a balance point. In theory, we could potentially see a most likely bottom develop for Bitcoin at and around the price points of 52,000 to 48,000. That would be the most likely, with a worst case potential scenario which would be around 38,000. However, I do not believe that to be likely. The most likely points would be around 52 to 48,000. That would be not only the high time frame point of support, but it would likely line up similar to where the midline of the Gaussian channel would be, around about the 5th of October 2026. And if we look at the prior bottoms, we've bottomed out pretty close to the midline of the Gaussian channel, if not just below it in the prior cycle. So be watching very close to that point for a potential macro bottom for Bitcoin. If we wanted to take it a step further, we can move over to the 2-week chart. And what we can see in the 2-week chart is that historically, and I know there's a lot of mess over here, so we'll just go ahead and clean these charts up very slightly over here. Let's just go ahead and get rid of the conversion line and leading span A. What we can see in the 2-week chart is that historically, when we have the 2-week breakdown for Bitcoin of the baseline breaking below the leading span A, so this red line breaking below the clouds essentially, that is when we see the bottom for Bitcoin. So we can show you that over here. You can see over here, we've had the bottom for Bitcoin. If we move into our next cycle, of course, we can see the bottom for Bitcoin comes around that breakdown point, okay? So every single time the 2-week breakdown results in that, if we extend the baseline forward, we could definitely see that angle push back down into that point around the same date. So again, highly speculative. It may not play out, but if we see the pattern continue, that is how the pattern will develop. So again, I want to make it very clear. This isn't like what I think is going to happen. This is simply what the pattern has been doing, and we're just extrapolating that pattern forward. If the pattern plays out, that is what we'll see. Now, the pattern will break if we top above the 29th of October this month. So we'll see a top in November, see a new top in November, December, etc. This pattern will potentially break, and according to my data, according to the mathematical equations I've gone through, there is around a 30% chance, that we will see this cycle and this pattern break upwards, meaning this prediction will become invalid if that happens. Something to pay attention to, keep your eyes on. Bitcoin, let's take a look. Bitcoin has been pushing up from these lows very strong. We're retesting the 50 EMA, we're retesting the 115k level. Very clear resistances, prior support, current resistance, still at that point of resistance, still challenging this resistance as we speak. The next one is 118. For us to be entirely confident the buyers are fully back in control, what we need to see is we need to see the current downtrend fully break. So what would that kind of constitute? That would constitute the breakdown or the break up of this trend line, as well as the breakout of 118. So we break the 118 and break this trend line, we will likely push into new highs again. Very, very likely. If we want to see the price exhaust to the point of which we will see a correction back down, we need to see this RSI uptrend be lost prior to these highs taken out. So the highs, 116,000 essentially. If we lose this uptrend, we will likely see corrections back to the change of character. If we break this range high, we are pushing into 118. We are pushing into that high time frame point of resistance. Keep it very simple. There's no need to overcomplicate it, guys. Moving over to the weekly chart, we can see here on the weekly chart, we are holding some important levels. We saw a pretty bearish weekly close with the breakdown of the RSI. Again, this is a very important piece of data. Losing that uptrend on the RSI is a very bad sign. If we are able to close above 116, 117, 118, around that point, we could push back in here, invalidating that breakdown, suggesting momentum on the weekly has been returned to the buyers. If we look at the base, the bull market support band, we've been holding above the bull market support band for quite some time here. On the weekly, again, a very important point we are watching. Even a break in this level could result in corrections through into the 50 EMA and the Gaussian channel upper band. And if we're looking at something like a 3-day chart, we can see the 3-day chart, the 50 EMA has acted as a very important point of support. We can see bouncing 3 times from that point now, holding very, very well. So all in all, guys, Bitcoin is still looking shaky. Its uptrend is still intact. What we are seeing here, if we are seeing anything, it is a beginning of a reversal. This isn't weakness yet. This is a beginning of reversal. We've seen some exhaustion develop. We've seen deviation set up. We're seeing momentum flip downwards. The trend itself is still pointing upwards. We take a look at the weekly trend here. We are still above the 50 EMA. We are still above the Gaussian channel up band. Historically, bear markets only begin when we lose that Gaussian channel upper band and the 50 EMA. So going back to prior cycles, we're showing you the prior cycle. Historically, only when we lose the 50 EMA and Gaussian channel upper band do we enter that higher time frame correction. So there is still quite some time for Bitcoin to travel sideways or down, regain strength and push upwards before it runs the risk of entering a macro correction. So there's also something to pay attention to. So to summarize Bitcoin, the short term, we are paying very close attention to how this momentum is developing. If we see a breakdown in the RSI, expect correction back to 112. Of course, if that happens, all we've done is we've just extended this downtrend. We're still in the downtrend. We've just created another lower high, another point of resistance we need to break. I'll be challenging these lows again. Of course, if that happens, we run the risk of corrections to 98 to 100,000. So pay attention to that. Let's jump over to the total cryptocurrency market cap. The total cryptocurrency market cap is looking decent. We saw probably the most crazy candle I think I've ever seen on the total cryptocurrency market cap last week. And of course, we all know why that happened and what that was all about. But that was seriously insane. What we are watching here for, guys, is the same as Bitcoin. This is going to be an assumed local top. This is a deviation from the range. We're expecting that bearish divergence, of course. This is going to be an expected top. So corrections into support is likely if we close a weekly candle below 3.65 trillion, that is when the high time frame charts or the total cryptocurrency market cap turn bearish, and this is a reflection of the crypto market. So breaking a weekly candle below here and closing below will be a very good sign that the buyers are out of control and the sellers are fully in control on the weekly. We could expect extended corrections. Until that happens, there is hope, there is optimism that the market can still recover, okay? And that is how I'm looking at it. Cautiously optimistic. Looking at the altcoin market, and if you thought the total market cap wick was crazy, the altcoin market cap wick was more insane. Look at the, maybe I shouldn't use French. Look at this wick. Absolutely crazy stuff, guys. I look percentage-wise, 36%. Mental, absolutely mental. Nevertheless, resistance is resistance until it is not. If we want to see altcoins get back in control, we want to see Bitcoin dominance drop, we want to see altcoins fly upwards, we need to break this resistance. Until that happens, we are still pessimistic on the altcoin market, okay? If we break this resistance, bullish. Bullish as all heck. Altcoins will likely push upwards quite aggressively. If we lose 1 trillion, we will see corrections again for the altcoin market. We'll leave it there, guys. Thank you for tuning in. Have a fantastic rest of your day. We'll catch you guys all on Thursday's video. I look forward to seeing you then. Goodbye.